Thank you for taking the time to meet with us this evening, taking time out of your very hectic schedules. My name is Valdemar Collins. I'm the president of Merchants Commercial Bank. And I'm joined today with some of my colleagues who were very instrumental in putting this workshop together, namely Mr. Ro Kiani, Ms. Deanne Day, excuse me, I'm sorry, Deanne, and other members from our team, our CEO, Jim Kreitz, who's also instrumental in assisting us to putting this together, and other members of our team. So many of you have probably heard of the Employee Retention Tax Credit, and many of you have probably been confused about how to access the Employee Tax Credit. We'll call it the ERTC for simplicity for the rest of the evening. And what we like to do as a bank, aside from what we do often, which is work with businesses to help them reach their financial goals, is we also like to give back to the community through service activities. This is a service activity that we put together by partnering with the Small Business Development Center, whom we thank greatly for the opportunity to utilize these wonderful premises. We've also aligned ourselves with two preeminent companies, that professional services companies that have the subject matter expertise in the ERTC, and they will be joining us to provide you with more information and hopefully more clarification on the Employee Retention Tax Credit. Just a little outline of how tonight is going to go. Once I leave center stage, I will pass the baton to one of the first of the preeminent companies in TSG, the strategy group. So we'll be hearing from Mr. Rod Goldman, who will be providing you with some key information about the ERTC that we hope will be very beneficial. Next, we'll turn to the second company, where the Obakai Consulting Group, who's also subject matter experts with the ERTC program. And we have Mr. Noah Smith and Mr. James Kahn, who will walk us through even more details surrounding the program and how you can access it for your business. And so without further ado, I am going to pass the baton now to Mr. Rod Goldman from the strategy group to provide you with more information on the Employee Retention Credit. Thank you.
Thank you.
All right, thank you very much for that introduction. And thank you to Merchants Bank and SBDC for letting us do this and present this information. I think there's a lot of myth and kind of misinformation about ERTC, and I'm only going to just go over a brief overview and summary and let Noah and James get into some further detail on qualification and applying. So I think most of these sessions that I've done, most people have a lot of questions. So I think we're leaving quite a bit of time for questions, which is most people usually have the same questions as everyone else. So employee retention tax credits are complicated. Let's see. So what is it? Employee ERC is very much like PPP. It was part of the CARES Act, and it is a way to help businesses help businesses with kept their employees on payroll during COVID. PPP was a loan that had to be forgiven. It was run through the SBA and banks, so it was pretty well advertised. and banks and the SBA did a good job of presenting it to the public, and a lot of businesses took advantage of it. The ERC is more like a tax credit that runs through the IRS and the US Treasury, and they did not advertise it very much. And when it first started, no one ever heard of it, and it was very confusing, and it changed every few months or 6 months. It changed 2 or 3 times, and most even accountants were kind of like, this is really complicated, and they keep changing it, so we're really not going to deal with it right now. But that's all in the past, and now it is getting more popular as companies are advertising to promote preparing the tax returns and applying for credit. So it's not a loan. I call it a payroll tax credit. So you're getting credit for the payroll taxes that you paid on these employees, and the IRS is kind of giving you a bonus. So you can get up to $26,000 per employee, depending on how much their wages were during COVID, which they're calling Q2, April 2020 through September 21st, 2021, Q3 of 21. So it's available for 6 quarters, and many businesses are now starting to apply for this. The way that you apply is you're actually amending your payroll tax return. So you filed payroll tax returns in the VI at the 941 SS. You paid your payroll taxes on your employees, and now the IRS is giving it back to you. Congress is giving it back to you by giving you this refundable credit, and then they're also giving you an extra bonus. So our firm or Obakai, whomever does your amends that payroll tax return, sends it to the IRS, and you wait a few months and the IRS sends you a check. So it's very similar to PPP to help businesses get through some financial hardship or COVID, but no one knew about it. So they're allowing you to amend it. You have 3 years from when the return was due to amend. So the 2020 returns start to expire in 2023. And then the 2021 start to expire in 2024. So there's but not everyone qualifies. So there's 2 general ways that you qualify for this credit. The first one is, and I'm going to let, I know Noah and James have some pretty good detail on these qualifications. So, but in general, you have to have a reduction in revenue versus 2019. So 2020 needs to be 50% lower than 2019, quarter versus quarter. And then they decided that was too much and changed it to 20% for quarters in 2021 versus 2019. And those are really easy to measure. You take your quarterly sales and you compare them to the prior year, to 2019, and see if you qualify for that quarter. The extremely vague, subjective area that everyone is confused about is you can qualify if you did not have that revenue reduction under what's called full or partial shutdown. And this slide says you need a negative impact due to COVID regulation. The way that they describe that and is a very subjective as well, is a more than nominal effect on your business operation due to government order. So that's it. That's all it says. And that is very, the first time that I've been a CPA for 30 years, an IRS rule that just kind of is very vague and general and leaves it up for you to decide whether you qualify or not. So if you had a supply chain disruption due to government order, or travel restrictions, or curfew that caused you to modify your business hours, even if you did not have a reduction in your gross sales, you could have an increase in your sales, but you had to more than nominally change your business operation, you can still qualify. But that it's kind of a narrative that you want to go through with the person preparing it and decide whether you feel like you had a significant effect on your business operation. But again, the OBCAI has I read your slides and they have some good detail on that as well. So we amend the tax return, the payroll tax returns, send them to the IRS and they send you a refund. And that's basically how it works. So with that, I think I'll turn it over to Noah and James and look forward to the questions.
I don't mean to interrupt, but we can't hear you guys in the training room. So Jamari, can you jump in and unmute the training room, please? Thank you.
Anyway, I've been coming down since 1999.
They can't hear you.
Okay.
No, we could hear you. Continue.
Okay, I've been coming down since 1999, and my primary specialty is SBA, it's small business lending. And I got to meet Roe over a number of years of calling on Roe and said, hey, let's do some SBA lending. And so Merchants Commercial Bank, I'm happy to announce, is diving into SBA lending. We've done a few. And so we're real excited to, so there's a little pitch for SBA lending if you're interested. But what I did then during PPP was that we processed over 9,000 PPP loan applications in my company. And so I kind of became a subject matter expert on these government regulations, government programs like I do the SBA. And so I've been partnering with James Kahn for a number of years on different projects. And when the ERTC tax credit, just to be clear, as Rod said, the ERTC, as Val said, is Employee Retention Tax Credit. We use the ERC and the ERTC interchangeably. So if you hear us say ERC or ERTC, they mean the same thing. And I believe, Rod, in our minds too. So just a little heads up on that piece. But anyway, James and I have worked closely for a number of years, and we started working on, he brought this actually, the ERTC, to my attention. As Rod said, it was buried deep in the legislation of 2020 and 2021 to try and help companies, small businesses impacted by COVID. And we started doing it up in our market in Indiana, where we're from. And I reached out to Roe and said, hey, this is something I think that could really benefit the island. As Rod said, it's a tax refund. You actually get cash back on payroll taxes you've already paid. And I'll let James dive into that more in depth. James is a small business owner, and I'll let you tell his story, but I think you'll find it intriguing about how he struggled to survive, as I'm sure some of these small business owners have been challenged over the last 2.5, 3 years with the COVID pandemic. And I think he'll talk a little bit about that too. Thank you.
Hi, James Kahn. Like Noah said, I met him, actually I met him about 14 or 15 years ago, I think, when I was first looking to get finance. I own restaurants primarily. So we have 4 restaurants, a coffee shop, 2 breweries, and we're starting to dive into real estate now. But 3 years ago, we were starting to dive into bankruptcy. So we had our restaurants, everything was going really well, and you know, COVID hit and our state shut down restaurants. And at the time, I felt like I was doing a good job as a small business owner. I had around $300,000 saved up in case of an economic downturn. And I paid all my employees. We got shut down March 16th. I paid all my employees. I paid all my vendors. I paid all my rent and mortgages. And we had like $19 in our bank account on April 1st. So my wife and I, we actually sold some rentals that we had, and am I doing something wrong? Rob?
No, just
Okay.
you
can do the other
test slides.
do the other slide. What's that? Oh, I know, but this is the wrong presentation. So we kind of emptied our savings and did everything we could to stay alive. And then at the time, I think it was March 23rd, they the economic injury disaster loans were announced, so I started diving into trying to figure out how to do that. And then PPP came out shortly, maybe a week or so later. So we applied for PPP loans, and like Noah said, in the CARES Act was the legislation, the first iteration of the employee retention tax credit. So I read that thing cover to cover because my livelihood depended on it. And we had, at that time, 200 employees, 250. And I bear their burden of I mean, to me, it's my responsibility to provide for them. They've trusted us as a company. So I spent most of 2020 becoming a law expert, reading legislation as it was proposed every single week, it seemed like, for a while there. Oh, how come that's not syncing there? This one is yours. Yep. So
This is the TSG one.
yeah, it's on the right computer here.
Oh, okay, gotcha. There we go.
So I know what it was like to struggle. I know a lot of my friends that own businesses, a lot of people that I ran into in our town and around the Midwest didn't get PPP loans right away. So I started utilizing NOAA and the bank that I use locally there and trying to help them get funded. And that kind of started my philanthropic help everyone stay alive kind of thing. So as this tax credit came out, we applied right away. Rod mentioned the ways to qualify, and I can go through that. Oh, I almost messed up. Yeah, Rod mentioned the ways to qualify, and there actually are 4. Initially, there was just the one, and it was based off of a drop in revenue. And it's probably the most difficult way to qualify. We qualified for that for our quarters 2 and 3 of 2020. And just for information's sake, well, I'll jump back into that. So what is the ERTC? It is a tax credit. It's aimed at helping companies keep their people employed. So this is a large sum of money that's going to come in. It does come in as a taxable income. And it's based on every employee that you have, every W-2 employee that you have. It will not include owners. If you own more than 50% of your company, you can't use your W-2 wages, nor can you use W-2 wages of anyone that's directly related to you. So that's important to note as you go through this. It was first enacted in March of 2020 with the CARES Act. Eligible employees were all trades, businesses, tax exempt organizations. And the qualification was just on this revenue drop. So like I said, that's the most difficult way to qualify, especially since a lot of businesses actually experience an increase in revenue. The way that that's actually determined is to say, at one point it was 80%, but now 50% of your revenue from quarter, whatever, 2, 3, or 4 of 20 versus the same quarter of 21. If you have that much of a drop, you automatically qualify for all that quarter, and you stay qualified for every subsequent quarter until you have a revenue by comparison in the current year, quarter 20 versus 19, that's at least 80%. So if you have a company doing $100,000 in revenue, you do $50,000 in a quarter, all of a sudden now you're qualified. You'll stay qualified even if quarter 3, if that was quarter 2 of 20, you would qualify in quarter 3 of 20, even if you did 60,000. If you did 70,000 in quarter 4, you're still qualified. 80,000 in quarter 1 of 21. That would be the year, that would be the last quarter that you would qualify for it, but you would remain qualified through the end of that quarter. The problem is that most companies didn't experience that big of a revenue drop. Even hospitality, where I'm in, we had an 90% drop in quarter 2, but only a 15% drop in quarter 3 of 2020. So we qualified for quarter 2 and quarter 3 under the revenue test, but did not qualify for quarter 4. And that's largely due to people having money, being cooped up, wanting to get out, and also the fact that inflation. I mean, we raised our prices. We're doing the same revenue today that we were doing in 2019, but on probably 35% less guest counts. So that's the inflation we've experienced. So that's one way to qualify. Like I said, I think it's the most difficult way. To jump back into this history here, the calculations of your credit goes by employee. And it's different in 2020 than it is for 2021. So in 2020, you can use $10,000 of wages. So Rod mentioned payroll taxes. That's a little bit of a misnomer. It's actually wages that you pay that you use to calculate your credit. So your payroll taxes are, I think, 7.625%. Is that right, Tisha?
Yeah.
7.65.
7.65, thank you. So, but you actually get, for 2020, 50% of the wages that you pay for an employee as your refund. So again, if somebody made $40,000, let's say in 2020, you're going to be able to claim up to 10,000 of that as your ERTC, and you'll get 50% of that 10,000. So $5,000 back. Your total payroll taxes paid on that $40,000 is somewhere under 3,600 bucks. If somebody has a calculator, they can check me on that. So this is a huge incentive for businesses, and that's why your email inboxes are probably flooded with 1,000 people trying to garner your business. So in 2020, its first iteration, this is how it sat. It's been amended 3 times through different acts, 2 acts in March of 2021, the Relief Act of 2021 and the American Rescue Plan Act of 2021. And most recently, the Infrastructure Investment and Jobs Act back in November. So those added these amendments added the way that you qualify, and it also changed a little bit of the calculations. It added the eligibility for quarters 1, 2, 3, and 4 actually of 2021. Qualifying for quarter 4 of 2021 is a more difficult thing to do. And it's only for these recovery startup businesses that you see here at the bottom. But the amendments to the ERTC in those subsequent acts were how you qualify, how the credit is calculated in 2020 versus 2021, your eligible quarters, and a little bit of the businesses that are eligible, and then introduce this recovery startup business. Just, I guess, to not leave that cliffhanger, that a recovery startup business would be a business that was opened after February of 2020. So prior to, I believe, November, the Infrastructure Act, if you were a new business opening after February of 2020, you were kind of out of luck. You really didn't have anything to compare to in 2019. And so this makes you eligible. If you're one of those businesses, you become eligible for your wages all through 2020 and all through 2021. The recovery startup business qualification limits you to a maximum credit in quarters 3 of 21 and quarters 4 of 21 of $50,000 in total. So our companies, we have $6 million of payroll across in a year. If we had just started, we would only be able to claim up to $50,000 for quarter 3 and quarter 4. The quarter 3 eligibility is bifold. So if you're a recovery startup business, you would be automatically eligible for it. If you qualified under one of the first 3 ways, so either the revenue test or government restrictions on your business or government restrictions on a supplier, then you would be able to claim the full credit. But only recovery startup businesses are maxed at $50,000 in quarter 3 and quarter 4 of 21. So if you guys have questions, I tend to speak quickly, and so don't be shy if you need to interrupt me through them. So these are the 4 U.S. territories that are eligible. That's obviously pretty pertinent here on the island. The 4 independent tests, revenue tests, government restrictions on the employee, we just went through that. I already told you about wages of families. Calculating it, it's all based on qualified wages, again, not payroll taxes. And the qualified wages include the wages that you pay to an employee. They include any healthcare expenses that you paid for as an employer. So not their premiums that they paid for out of their check, but any match that you made. If you're paying 50% of their healthcare, that 50% counts, and that can be really important. And when calculating here in a second, I'll touch on that. It also counts any 401k or IRA contributions that you're making. You can count that as wages. So henceforth, and when you're calculating this, when they're saying qualified wages, no, it includes all of that. Calculating the tax credit, you need to know that any money that you would have received from your PPP cannot be used to calculate these wages. So in 2020, a lot of businesses got PPPs. Probably less than half of those businesses got the second round of PPP in 2021. The good news is that in 2020, most people that receive their PPPs are going to have enough wages paid that you can exclude the wages you paid for PPP and probably still max out 2020. 2021 will be a little more difficult, but we've got ways to kind of help navigate that. So in 2020, as I said earlier, it's $10,000 of cumulative wages per employee, and you can claim 50% of that back. So if I had 10 employees all making $40,000 a year, I got a $250,000 PPP loan. I can show that I paid those PPP wages in quarters 2 and 3, and then still get all 10 of my employees in quarter 4 and get $50,000 back for those 10 employees. So that's 2020. 2021 is a huge difference and quite beneficial for employers. It's $10,000 per quarter of wages, and it resets every single quarter. And the wages that you get to claim, or the credit you get to claim, is actually 70% of those wages instead of 50%. So if I've qualified in here on the islands you guys have been under restrictions, until 2 weeks ago, really, depending on your business style. So most businesses are going to qualify for all 6 quarters. That means that a lot of businesses are going to be able to max out and get a $26,000 credit potentially per employee, because they'll qualify for all 3 in 2020 and all 3 in 2021, given the restrictions that were on you. So yeah, so that's that head note down there under qualification number 2. You'll get up to 26,000. So not everybody is going to get exactly 26,000. It's going to depend on who is paid what. Some important things to know: it is taxable. So you'll get this money and you'll have to pay taxes back on that. So we've had businesses get up to $2 million. So that's a big tax bill that's coming their way, but it's also $2 million of money that wasn't otherwise theirs, that they've already paid to other employees. Rod alluded to this as well. There's this credit expires 3 years from the eligible date. So the first quarter that qualified, Toshi, I hope I said that right. I'm sure that we can make those slides available to everybody. Yes. I think that we missed.
I meant to say, if you could put your email, Toshi, in the chat, or in person, if you could give it to Deanna, make sure Deanna gets it. We'll make sure we get you the slides.
Yeah. Okay, perfect. Yeah, so I saw another question, but that was just somebody from here. So yes, put your email in and we'll get you the slides. I was talking about the sunset. So the first eligible quarter is quarter 2 of 2020. I think the conventional assumption is going to be that quarter 2 of 2023 will then expire the eligibility for that quarter 2 of 2020, and it'll sunset off 1 quarter at a time as we move through the next year and a half. I'm not sure. Rod said that they're seeing a few months. Our experience, we've done dozens of these. No one has gotten their credit money back sooner. The fastest has been 5 months, and it really is going to depend on really what agent you get. So we're sending these off in dumps. Rod, the 941X is what we'll file for you. And I sent 20 for one group of businesses off at once, and we got 11 back within a week. And then the other 9 haven't happened. So I'm assuming they got assigned to this agent or that agent. And it really depends on how quickly they work, I think. So Virgin Islands were on restrictions the whole time, and that's pretty much it. This is my last slide. So why would you use us? Again, I know that you're probably getting a million emails. I get them every single day. I started saving them because I find them comical. But we've kind of had to learn this. So we were going to close if it wasn't for this. And my wife and I, we would have been bankrupt if it wasn't for this. So we've kind of like clawed and scratched to learn this. I've read this legislation cover to cover. That I think the CARES Act, and then the what was might have been the revitalization one.
Recovery Act.
Yeah, that last one was, I mean, something like 2,000 pages. It's mind numbing. But our goal is to help people because we know firsthand what it feels like to be like told, hey, sorry that you worked your life for this, but we're taking it all away and there's really not much you can do about it. So we're pretty emphatic on why we do what we do. We guarantee our work. So to the extent of what you provide, we need information from you so long as that is accurate. We guarantee everything that we do. We would stand by. If I would imagine that this is going to yield some audits. I mean, if you look at the PPP loans and some of the things that have happened in that, I'm anticipating that some companies are going to get audited for what happened there. This is a huge credit and millions of dollars are going to go out. I think you'd be really naive to think that that's not going to get looked at by the IRS. We provide a file of information on here's exactly how we calculated your credit. Here's these wages. Here's where we applied this. Here's where we applied that. And it prepares you for that audit. If you get that audit, we stand side by side with you to help work through that with the IRS. And if something was wrong and it wasn't because you said, oh, I own 17 restaurants and you actually are a street vendor selling oranges, then, you know, we're going to refund that money first. Any fee that we collected is the first money that's going to go back all the way up to every penny. So we guarantee our work up to every penny that we receive from you. We don't get paid until you get paid. So our fee is 10% of the credit that we're able to generate for you. The companies that have solicited me have been anywhere from 25 to 50%. And yeah, we've got relevant accounting experience around 25 years between our group. So yeah, I think that there probably are some questions, so we can open it up to that.
Yes.
Val, do you want to moderate that?
No, actually, it'd be great if you stay there. I've got the questions coming in here.
Okay.
So both Rod and
Yeah, we can.
James.
Is Rod unmuted as well?
Yeah, I am now.
Terrific.
Okay, so everyone, thank you. We've now reached the Q&A session of our presentation. So please feel free for those that are on Zoom to place your questions in the chat area. I will go through the first few because I think they're easy. The first one is, will the slides be available to us after? The slides and the video will be available to all via our website, which is www.merchantscommercial.bank. So you'll get a link. You'll be able to get the video plus the presentations that you see here. I see here, James, that there is a question from Bonita. I think Benita says we have already had this done by bottom line for a recommendation through an attorney. So the question goes, the 941X
Was checked.
for 941 versus 941 SS. Would that be incorrect?
I'm not sure what she's, Benita, I don't know if you can unmute and maybe dialogue with us. I'm not sure what you're asking. So your 941 and 941 SS, that's the form that you would file with your taxes on a normal basis. So do you,
Just the 941 SS is what we'll normally file.
okay. So in the States, I think we file 941.
Right.
Yeah, so, but the 941X is simply supplanting that. So it's essentially an amended 941 SS that you're filing, and you're saying, here are the wages that we had for this quarter, and this is how they were originally reported. The 941X allows us to say, hey, here are the wages that we had for this quarter. However, this dollar amount of wages we feel are exempt from, or we're due to have it be refunded from the ERTC. There's an opportunity for us to explain why we believe that, and then we file that and submit it in lieu of, or in place of. Does that answer your question, Benita?
I could add some
Yeah, please. Go ahead.
So it will matter, if you file a 941X and you check the 941 box, but your original return was a 941 SS, you'll probably get a notice saying, we cannot locate your original 941, and you probably have to do it over. I'm pretty sure that's what you're asking. I don't know if she can answer that, but.
Okay, next one is sort of general, and it's to both OPACI and TSG. Question is, I may have missed this, has your company assisted any local companies or in the process of assisting?
We have not assisted any local companies as of yet. I mean, that's why we flew down here to try to help the local companies. So I'm not sure if Rod has or hasn't. Our relationship with the island is really Noah and his family that have spent the last couple of decades here. And my relationship with Noah is we've worked together on different projects. So Noah having a relationship with Merchants Commercial Bank, sorry, is why we're here. So wanting to help people. But other than that, local companies, we have not been able to assist. Rod might have, though I don't want to speak for his company. So.
Rod, you there?
I am there. Yeah, we have an accounting practice in St. Thomas that we served hundreds of local clients, I would say, for income tax purposes, accounting, bookkeeping, and probably done, I think we're up to 50 or 60 ERC clients on St. Thomas. And I apologize, I cannot get back home in time for this, but I'm currently in Florida. But I live there and our accounting practice is in town on the waterfront. So a lot, quite a bit.
Thank you, Rod. The next question says, if we receive PPP through merchants, can merchants assist in getting copies of the exact dates PPP forgiveness covered by street shares?
I can feel that. This is Ro. Yeah, we will more than likely in our files be able to give you the exact a copy of the forgiveness letter that accompanied the PPP forgiveness. So we should be able to arm you with that. If you would send that request to lending@merchantscommercial.bank. Val, if you could type that into the chat, that would be great. You can send a request for us to look for that. We'll be able to assist you with that document if you misplaced it.
It can be through any bank or through anybody or only through.
So this is not a bank specific thing. This is something that, again, this is where they're filing amendments to your prior 941 payroll tax filings. So, you know, we as a bank are not in a position to be doing this. It's really kind of an accounting type
So
thing.
If I am doing with Bank of Popular, so they would give me a letter from what month I have.
You mean for your PPP?
Yeah.
Yeah, absolutely.
So
They
I
should
go
have
to my
one.
bank, my institution, and they can give
Yes.
me the exact date.
I'm sure you guys keep them on file.
We
for-
keep ours and they absolutely should
They
keep
should have,
theirs.
yeah,
And
because
Jimmy, they likely may have emailed you a package as
Yes.
well that would have had something like your canceled note, the letter from the SBA saying this loan has been forgiven.
That's.
That would have all the information, I think, that either Rod or James would need, you know, to assist in this kind of thing.
We'll give the exact date and what it was utilized for.
Yep, absolutely.
That's what we.
And if you happen to have your application materials as well, you know, more than likely you'll have your old 941s, you know, so that'll, you know, all that stuff would help, I think.
Correct me if I'm wrong, James and Rob, but the primary document we need to review your eligibility for ERTC is your forgiveness application.
That encompasses almost everything you need, right?
Yes.
So it tells us the amount that you got, when you got it, the time frame that
And
you were
is it
using
worth
it.
to continue, go to the next step.
Right, how much you, applied to payroll, how much utilities, those kind of things. Yeah.
Yeah, I mean, to pull the veil back off of what we're doing, it's not, the documents that you would need are, like I said, if you had a PPP loan, the PPP forgiveness documents, your 941 SSs from all the eligible quarters, and depending on your, you would need to have a breakdown by employee of any healthcare or investment wages that you paid by quarter. And depending on when you had PPP loans, we would want payroll reports by whatever time frame you distributed payroll.
Yes.
So we could allocate the appropriate amount of funds from your PPP to the appropriate people in order to try to maximize your credit. So it's not, we're not sending anybody to the moon with what we're doing. However, we've done it over and over and over again. I'm sure Rod would say this exact same thing. We've already built all of our performance out and all of our strategies to try to maximize it. That's really what all we're offering for our 10%. And again, just to be transparent, this is something with a couple months of studying, you can go and figure out what to do on your own. So, yeah.
The other thing, if you're a restaurant, we'll need to know if you got a restaurant revitalization fund loan or grant or a shared venue, also part of the Recovery Act from the SBA.
Just-
So I had a few questions for people that had called in regarding our hospitality industry and our high commission sales industry on island, and how this can assist them if they have tip wage employees
Great.
or high commission employees.
Yeah, so if,
Rod, wanna try that?
what's that? Oh, God, yeah, I'm hogging this because I'm here, Rod, so I don't want to, I don't want to leave you out. So if you want to jump in on any of these questions, I'll maybe pause for 5 seconds to let you jump in.
Okay, well, if I can back up a second, for PPP, you're looking for a 3508 or a 3508S. That's the only document you want, which is the forgiveness application, which details the portion of your PPP used for payroll and the portion used for other expenses. So if you ask your bank for a 3508, they'll give you what you want. And I'm not sure I understand the question. If you're a business owner, if you own a hospitality business.
Yes, and the employee either receives commission or tip income, does that also count? Yeah, it's payroll. Yeah.
Well, commission would be included in regular wages as long as it's part of their W-2 wages. A server or anyone in hospitality who has tipped wages or tips, claim tips, you would include, those are included. So they're a separate line on your payroll tax return on your 941. So both the server's wages and their tips claimed would be included. So typically the hospitality industry gets a pretty significant credit per employee, because the more tips they get or claim, the more credit they get.
Thank you, Rod. Next question, for clarity, when filing our 2022 taxes, how do we claim the credit? Would our taxes need to be done through our company to get the credit?
Yes.
Go ahead, James.
Yeah, so technically, I mean, the credit is for the company. It's not for the individual. So the money comes into your company. The guidelines state that you would want to go back and re-amend all of your tax returns to claim the money in the time frame in which it was earned. So like if you qualified for quarters 2, 3, and 4 of 2020, the IRS guidelines would say that, I don't know if guideline is the right word, but recommendations are that you would amend your 2020 tax returns and claim that money at that time. So I can tell you that is not what we did with my companies. We filed our we claimed our income in the calendar year, the taxable year in which we filed for the amendment. So our 2020 tax returns were done, filed, and put to bed. We were dealing with EIDL requests from the SBA and the IRS, and at the time we were filing for this credit, so we opted not to do that. We filed them on 2021, and then we became eligible for subsequent quarters after we filed our 2021 tax returns. So we were filing those quarters, actually quarters 2 of 2021 on our 2022 taxable year tax income return. So I believe the question is like, yes, you need to file it on your business. You need to claim that on your business, and your 941X that supplants your 941SS would be for that taxable year. Sorry. Brittany, is that from Brittany Val?
Yeah, that's from Brittany. She said she didn't get the answer she was looking for. Can I be unmuted?
Do I unmute her? Here, if you click there. Oh, this one? Brittany, yep. On our end, it's saying that we have to ask to unmute, so I'm not sure.
Okay, all right, so actually what the question was is that we were asking whether that in order for us to get the credit that we're looking for, do we have to file with your company rather than not?
Oh, no, you can, like I said, I did this on my own before we started even consulting, so 100%, if you go and you like study and do this on your own, there's no reason why you have to pay somebody else to do it. So I think I would be really remiss if that was the impression we leave anybody with. You're more than capable of doing this on your own. In fact, even us filing for you, we still need your signature on the 941X before we can file on your behalf. So it's if you're capable, certainly can.
Okay, where do we get the forms?
IRS.gov is
Okay.
where I would go.
What's the name of the forms? This said the 941?
That's us for us.
941SS is what you or your accountant would have filed on your behalf.
Okay,
941X is the form that you would need to download from the IRS. In order
okay,
to do this.
excellent. Okay, thank you.
Yeah, you're welcome.
Thanks.
I wanted to, Rod, have you seen this? The IRS did put out a suggestion for what a nominal effect is when calculating it, that it's taking 10% of more than 10% of your revenue and under the restricted time frame. And the example that they list on there is that if you were under restrictions for, let's say, this isn't the example I'm going to like recreate it, but if you're under restrictions from April to June, they would want to look at your revenue from April to June of 2019. And if that was more than 10% of your revenue of all of 2019, then you would be considered to have more than a nominal effect in 2020 when your restrictions were there. Have you seen that, Rod, or no?
Yeah, I mean, the 10% rule being their definition of more than nominal effect is any effect on your business operation being 10%. You had 10% less employees, 10% less capacity, 10% less production, 10% less of anything, not necessarily revenue, but the definition of more than nominal effect is a 10% effect, yes.
Yeah. The example that they listed was just the revenue, but I would agree with Rod's assessment in that personally as well. So.
While we're waiting for other questions to pour in, Val, I do have a couple here that are particularly important to us in the Virgin Islands. you know, one, is there a finite pot of money similar to how PPP was administered for this program? Does that impose a sense of urgency on business owners on timeliness to file?
I'm pausing my 5 seconds as promised for Rod, but I would answer that as no, there's not necessarily a finite amount of money because it's a tax credit that you get back. However, in my experience with dealing with the government in the last 3 years, they can change the rules whenever they want to. So the sunset on this is 3 years. That's Q2 of 2023. And for me, before we started helping anybody else, I put my mask on first in the case of a crash, right? So we filed all of ours right away, and now we're trying to help others. So I would feel like there's a pretty good sense of urgency. I'm sure Rod would say something similar.
It would take an act of Congress to take away the CARES Act. So I'm going to go with no on that one. There's a sense of urgency in you're dealing with the IRS, and that right now they might be processing them efficiently, but in 6 months from now, that might double, triple, quadruple. But the money is the money. I mean, Congress would have to revoke the CARES Act to get rid of it, I guess. So
Well,
no, I
the
don't think
refund of
there's-
money you've already paid, so it's.
Well, it's not tax money. I would say Rod's correct. It takes an act of Congress. So the best way to answer that question would be to the extent that you trust Congress. That's the sense of urgency that you should have.
One more question while we're waiting for a couple more, Val. For Virgin Island businesses, would any such check or disbursement be made from the Bureau of Internal Revenue locally, or would it be a check directly from the IRS? Or is it a treasury check? Where's the funds? Where's the money coming from?
The money should be coming from the IRS.
The
Treasury
IRS.
Department. Yes, yeah. So Rod, you have the local experience here, being an accountant and CPA. So your 60 some that you've helped, maybe you would be the best one to answer that.
It's all through the IRS. The credit, the payroll tax, amended payroll tax return is through the IRS, but your amended income tax return is with the BIR, which is a different animal. So you're not getting your money from the Bureau of Internal Revenue, but you are filing that amended return with the Bureau of Internal Revenue.
So there's an answer to your question, Ro. I'm sorry.
No, go ahead.
There's an answer here to your question. It says the urgencies, you have 3 years to file
The amendment. Yeah.
3 years. Sorry.
No.
Ken.
You brought up a great point. You mentioned the Virgin Islands and uniqueness. I know dealing with several folks with this program, with all due respect to folks that come from the mainland, they don't understand the tax codes for the Virgin Islands.
True.
So my recommendation to a lot of folks has been, please talk to your local accountant that understands Bureau of Internal Revenue and Virgin Islands tax codes, because there has been some uniqueness in businesses and what they have filed when they are applying for the ERC grant. So that's something to keep in mind. And again, we have had folks to go back and talk to your attorney, go back and talk to your accountant, because we've had several cases where they forgot about the whole you get excited about getting some money from, Treasury, IRS, the IRS, and forget that you have to deal with the IRB and how you filed your taxes locally for your business. So,
aside from filing in this jurisdiction, though, we follow the mirror. I mean, the mirror tax code is, we are an exact mirror of the federal tax code. So is there some other nuance that we should be aware of?
Well, I'm not a tax expert, but I can tell you that that's what I'm saying. Talk to your accountant.
Fair.
Or someone that understands the local tax laws and rules, because we have had several folks that didn't do that, got excited, kind of did on their own. I know of one particular other client that I had that went with the company on the mainland, and then after everything was done, Now they have to go back and it's created, they were happy about getting the money, but it's created some strife in their life right now. So the benefit of having a local guy sometimes that understands IRB will help you when you amend and file your taxes and apply for the program.
Yeah, I would advise everybody to spend time. If your lawyer charges $400 an hour, it's worth $400 to have an hour-long conversation with them. If your CPA charges $400 an hour, it's worth $400 an hour to have a conversation with them. So you shouldn't rush foolhardily into anything.
So I have a question. So as you mentioned that if you might get audited, so will be audited by IRS or BIR?
This would be an audit to the IRS. I mean, you're amending your payroll tax form that you sent to them. So to their point, I'm unfamiliar with the BRI. So I don't know if they would have a subsequent amend or audit. My suspicion is that if you did not file then that I received this money from the United States Treasury on your taxes here in the Virgin Islands to the BRI, then that's going to trigger another audit.
Okay.
But should you say, here's the money that I received from the United States Treasury, I'm reporting this here to you to the BRI, then my suspicion is that you should be okay. The danger of the audit, I think, is people that I alluded to anyways. The danger of the audit that I alluded to is in reference to the payroll taxes to the United States Treasury. So just because billions of dollars are going out for this credit, I mean, it is widely encompassing a wide array of businesses. It's not on taxes paid, it's on wages paid. When you have 300 employees, I mean, those numbers add up really quickly. So yeah, that's what my alluding was to.
Rod, have you seen any audits or BRI audits?
Well, no one's really filed an amended return yet. This has gotten fairly popular in the last year, so most people are just starting to get their money now. But like I was saying before, if you amend your income tax return for the 2020 and 2021 for having received the ERC, then you may be subject to audit by the BIR. And then, as James was saying, you have the audit possibility from the IRS for the payroll tax credit, the amended return. So you're kind of in the VI, you have two bureaus to deal with, possibly. Hopefully not, but you have both governments yes, it's a mirrored code, but there are two IRSs basically. So there are two agencies looking at it.
Okay, next question. Can a company that had to close still claim this credit if they were operating in 2019 to 2021?
Yeah. Yes, because this is a retroactive representation of the wages that you paid and what was taxable and not. So even if you have closed your business, you can still go back and amend those tax returns that you filed.
Okay. Thank you.
You definitely should.
What do you get?
This next question is, can you file the amendment for tax year 19, 20, 21, and 22?
No. Oh, sorry, Rod.
The payroll tax credit, the 941 amendment is for Q2 2020 to Q3 2021. So there's no 2019 or 2022.
Okay, thank you. Any other questions in the training room?
I have a question. Is there any number of employees we need to have on our 941, like you need to have 5 minimum or?
One.
One, okay.
Yeah.
That answers the question.
We've done this for churches and I mean, they have one secretary that's a W-2 employee and everybody else is a 1099. So.
Thank you.
It sounds like someone wants to be unmuted if I read that message correctly, Val.
Yes, Moral Tinson.
Moral, can you try, are you unmuted now or no? Did that work?
He was having difficulty hearing, but it's probably his personal device, but you guys are good, so you can continue.
Does the credit also include 1099 staff or only W-2 employees?
Just W-2.
Together now.
What's that? Yeah, right. We weren't laughing at whoever asked.
No, not at all.
I'm just gonna field one more. Questions?
And then Val, if you don't mind, could you share, I think Leah asked that we put in the chat, the lending@merchantscommercial.bank email address.
I did.
Oh, you did?
Yes,
Okay,
yes,
I saw that message
yes.
pop up again,
Yeah.
so I just wasn't sure if she
Oh,
missed it.
I'll
Okay,
put it in again.
thank you.
And I'm sure the chat is probably downloadable, right?
I'm pretty sure it is, yeah. So we should be able to, we'll find her too.
You can also find Merchants Commercial Bank on LinkedIn. I'll have a link to that, this recording also.
Just want to make sure everybody heard that. You can find Merchants Commercial Bank on LinkedIn. So,
Correct.
yeah, I just,
We'll add a link to this recording there.
Okay, wait a minute, something just came in. Is there a minimum number of employees that a company needs to qualify? Or is it based upon total employee tax?
just one W-2 employee that's not an owner or a relative to an owner more than 50% of the company. So.
How soon will the slides and video be available on the merchant's website? That's to us. Will you please give us at least 48 hours?
48 hours at minimum. Congress doesn't do anything in 48 hours. Yeah.
Okay, here goes it. So just to make sure, we cannot claim tax credit using wages paid by PPP, correct?
Yes, that's correct.
I think there's a second part to this question, which means, let's say we use the first round of PPP and we cannot use those wages to claim credit.
Yeah, so for example, if you got, if you received the first PPP in quarter 2, 3-ish of 2020, and let's say that initially that was an 8-week payback timeframe, and then they switched it with 7 weeks and 5 days to a 24-week payback timeframe. So even if you went through the first 24 weeks and let's say you got it in April, that would still leave you the wages in October, November, December that you could use for this credit. And that also depends on how you utilize that PPP. So in order to get forgiveness of your PPP, you needed 60% of that to go towards wages. So if I got $100,000, I used $60,000 to pay wages over, let's say, April and May. the other 40% I used for other eligible expenses, I've got my forgiveness letter. Then I don't have to worry about the other 40% because that was not used for wages, that was used for rents or for other business expenses that were eligible. In which case that opens up your wages that you paid in that time frame to be eligible for the ERTC.
Okay. This one is probably for you, Rod, because it seems more VI specific. To be clear, did I understand you to state that we can report the income upon receipt to VI/BIR in the tax year received?
No, James and I will disagree on that one, but no, you cannot call it income when you feel like it because you got it in that year. The IRS doesn't suggest, they say that you have to amend the year that the credit applies to. So I don't agree with that one, but you need to amend the return. That's what they say. If you have a 2020 payroll tax credit, you need to amend 2020.
Okay, here's another VI specific. Would the monies received from ERC be subject to gross receipt tax or only income tax?
Just income tax, not gross receipts tax. Thankfully.
To be clear, I was just saying that we filed ours in the year that we claimed ours, I should say, in the year that we filed ours. So.
Well, you did it wrong. It's okay.
We did ours wrong.
Right. Correct.
This is to Rod. Any tax consequences, penalties, interest from IRB?
Well, great question. The IRS waived penalty for amending for the underpayment of taxes if you went back and amended 2020. Now, technically, the BIR has to do the same. Getting them to understand that there should not be a penalty on this amended income tax return is a whole different story, as we all in that room probably know. So I'm guessing on the initial pass, if you did amend, they're gonna charge you a penalty because it's the BIR, but eventually we will get that penalty waived because the IRS is waiving all penalty, not interest though, interest is interest, waiving penalty for the underpayment of tax, which results from amending the 2020 and the 2021 return. So it's going to be a little bit of a fight, and we kind of had this discussion at our firms just this morning that we have to really amend, and then we're going to have to fight about the penalty because the first time the BIR is not gonna understand why you're amending and that you are exempt from penalty because of this special rule.
Okay, so just for clarification, interest will be due by the taxpayer.
Absolutely, interest is interest, but the good news is they're paying you interest on this credit. So if you have $1,000 ERC, you're going to get $1,100 back. So you're getting interest on the money that they've been owing you because you didn't claim this credit 2 years ago, but then on your income tax, which is going to be less than the payroll tax credit, you're going to pay interest on your income tax that was due back then as well.
Thank you.
Okay, Rod and James, if you could kindly type into the comments who anyone that's listening should contact with your consulting company directly to start the process.
Sure.
And I think each of these presentations also had that information available at the end. So when we do share those presentations, it will also contain the contact information for both Rod and James.
Correct. This looks like the final question, but I'm not sure. They keep coming in. Can you claim wages paid to subcontractors?
Not unless they were a W-2 employee. So
Okay. We're gonna close out the Q&A session at this point. Let me just ask in the room, are there any other final questions? Okay, we can just give a round of applause to yes, G. Okay, well, we hope that the information that was shared with you today was instrumental in making your decision about what how you want to move forward with the ERTC. We'd like to take this opportunity again to thank the team here at the Small Business Development Company for hosting the event in this wonderful facility that you have here. I'd also like to thank our consultants, TSG and Obakai, for providing invaluable information to the businesses here in the U.S. Virgin Islands. We hope with all of the requests for information that when the businesses reach out to you, that you can start a dialogue with them. Also, I'd like to end by also thanking my team again, Ro, Deanne, Jim, if you're watching, Elizabeth, who also was helpful in assisting us. We also want to say a special thanks. So the information, just to reiterate, the information on that you've seen in the presentations will be up on our website. Our website at Merchants Commercial Bank is www.merchantscommercial.bank, BANK. So we will be sending out follow-up communications as well as posting this information on our website. So thank you very much for attending and taking time out of your valuable schedules. Have a good night.